From Beijing to Moscow, the message is clear. US dollar must come to an end. The recent SEO summit in China fueling intense debate. Is the age of US dollar finally coming to an end? While headlines focus on the push to use local currencies, the reality is far more complex. Here is a breakdown of the situation. The US dollar is global reserve currency almost 81 years since 1944 after the Second World War. The dollar's dominance isn't an accident. It's a deeply embedded system. Its power rests on three main pillars. First, the network effects. The dollar is the global economy's default operating system. Nearly 60% of international trade and the vast majority of foreign currency reserves are in US dollar. Everyone uses it because everyone else uses it. Second, the ultimate safe haven. When crisis hits, investors don't rush to buy yuan or ruble or any other currency. They buy US Treasury bond. This creates a permanent global demand for dollar. Third, commodity pricing. Oil, gold, and other critical commodities are priced in dollar. To buy the world's most important resources, you first need the world reserve currency. This isn't the first attempt to dethrone the dollar, but it is the most significant. One of the earliest and most vocal challenges to the dollar supremacy came from France under President Charles de Gaulle in the 1960s, and he failed. In 1971, President Richard Nixon unilaterally dismantled the Bretton Woods system by ending the direct convertibility of the US dollar to gold. And most analysts were saying that US dollar come to an end because it's become fiat currency. But it isn't. The launch of the euro in 1999 was seen many as a potential challenger to the dollars. But till today, euro is far behind dollars. And now the goal of SEO and BRICS nation isn't just about trade. It's about creating a parallel financial system to reduce their dependency on the US and insulate themselves from sanction. A currency's bid for global reserve status hinges on a crucial factor: trust. International investors and central bank must have absolute faith in the issuers, stability, and legal system. Currently, no rival to the US dollar offers a credible alternative on this front. Stability and rules of law. The US offers a long-standing history of political stability and predictable legal framework that protects property rights. Investors are confident their assets won't be arbitrarily seized or devalued by sudden political changes, a guarantee that is less certain in potential rivals like China. Unmatched liquidity. The US financial market, particularly for treasury bond, is the world's deepest and most liquid. This means trillions of dollars can be bought and sold quickly without crushing the market. A practical necessity for managing global reserve that no other market, whether Europe or Asia, can handle at this similar scale. While other economies are large, they lack this essential combination. The Eurozone lacks a unified government to back its debt, and China's system of capital control and lack of transparency undermine global trust. Therefore, the dollar's dominance continues not just out of habit, but because no other nation yet provides the required foundation of security and accessibility. Beating dollar's dominance isn't hard. It's almost impossible. It may happen, but it will take generations. See you in the next one.